Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look what the fruits we've got from the recent Fed statement. So actually, a statement of the Powell was relatively dovish, but it seems that market has treated it as not dovish enough, as you can see reaction on the strength of the United States dollar as a result of this. So the one maybe thing that was not really satisfied the market is he said that hardly the Fed will cut the rate in March. So because investors really had some hopes that it should happen relatively soon. But as we know, things that the Fed usually talk doesn't mean that they will act precisely in this way. So it is around the 2 months until the March, and many things could change. So, but for now, with the strength of the United States dollar suggests that the Fed results was not in a row with the expectation of the dovish expectation of the market in general. The same story we could see on the dollar index. You can see that we have this up prediction. Take a look, by the way, guys, how our price shape has changed on the dollar index. Yesterday we talked about the grabber, but for some reasons, I do not know what the reason was. The ICE exchange has changed the candle that actually has been closed on the moment where we have prepared the update recently, yesterday. So recall what we said here, this market has a grabber here on the dollar index, suggesting that probably will be upward action, but you can see this candle has changed. So in fact, we do not have a grabber here, which makes no big impact on the market, but still with the pattern and without the pattern, it's a bit different thing. So on the daily chart on the euro currency, we do not see really big changes. Yesterday, it was not quite, but very close to the reversal bearish candle. Here was closed just slightly above the lows of the previous session. But in general, the performance of this upward spike and downward continuation stands more in favor of the bearish sentiment, suggesting that downward action could continue. Now we're gradually going to payrolls on Friday. On the follow time frame chart, we also do not see any signs that the bearish context has been broken. Now we could easily recognize some kind of the flat, very low slope of the wedge pattern. This market accurately follows, and here is slowly but stubbornly it is going to the OP target, which is 107.40 approximately. As we keep watching on the 4-hour time frame chart, we have the minor tricky situation. So if you take a look at the futures, you will see that here we have two grabbers stand side by side. But with this market performance that we have right now, well, I would not overestimate the importance of these patterns. So it's very probable that it could just be erased very soon within a few hours. Anyway, whether this grabbers will survive or not. So for a position taken, if you would like to, you anyway need to wait for some bounces, just because you can see how accurately market falls with the channel. And it means that since it stands near a lower border, it's more probable that we could get here some bounce. And on the hourly chart, these are probably two levels that you could consider for possible taking the position if you would like to. Also, it is very interesting to see what has happened recently. We've got anything, we haven't got anything except volatility. So market with this upward action has formed a larger ABCD pattern. So our initial entry point has worked nice with this downside action, but you can see it was not the final reversal. So based on the Fed expectations and general Fed meeting, you can see what has happened. So market just has shown this upward action. So in general, this kind of if you combine upward action and downward action, it could be treated as a kind of the bearish engulfing pattern. So because it was very fast action up and then very fast action down. So this in general stands in favor of the bearish continuation. And what is more interesting is that take a look at the level that we have specified as critical for a bearish context has not been broken. So market just comes to it. This was a confidence, as if you remember we discussed it in the previous few sessions, and hasn't broken it and just collapsed from this area. So it means that the bearish context is still valid. That's what we have on the euro currency. So right now we do not see any reasons to consider any longs position on the euro currency for the taking the new shorts. Once again, you have to be prepared for a payrolls report. This carries the same risk as the Fed meeting because a lot of volatility might happen, and well, usually it's very difficult to trade moments when some data releases. But if you are not scaring with that, you could consider taking the short position on some pullbacks on some few levels and see what will happen next.